Snowflake Stock, ticker symbol SNOW, reports earnings today, November 29, after hours. So that is in less than 20 minutes from now. And about 30 minutes ago, we detected some unusual options activity. And so we will analyze that briefly and then also show you how we are trading SNOW based on this unusual option activity. So without further ado, let's get to the data. As you can see here on the options time and sales tape, today's biggest 243, 42 second mark, 1,707. You can see here, this is the trade here. And then there was a second one here for 999 contracts done at 3:16 p.m. Okay. What are these for? Let's take a deeper look at these two sets of unusual options. December 8th, 185 strike calls, 205 strike calls. Price is here. Let's do a quick calculation of both of these. So, because these are being executed between the market, that's why the color is not green or red. That's why it's white. So there is a probability that this may not necessarily be a buy here at the 185 strike calls. Okay, but let's assume it is, because there is a slightly higher probability that it is, because everything we do in our analysis is always based on statistical modeling. All right, so 535 subtracted by the 128, assuming that this was the call that they sold, means that each trade was $407. So we multiply it by the total contracts and we get $409,000. Okay, now let's take a look at the other trade here for 999 contracts. So 444 subtracted by 194 times 999, we have about 249,000. Okay, so this trade here is the same situation. They were being done between the market, so it could be either a buy or a sell. It is not such a high probability that it is a buy. Okay, there are other times when we analyze earnings trades and it is a much higher probability, so we put in a lot more capital in trading earnings. But in this case, it is not. We also see that the value of these trades are not even exceeding $1 million. Unlike the trade for earnings on Dollar Tree today, actually is one of our earnings trades. Most recently, it was Dollar Tree. You can see reported earnings this morning, and today, now in the day, 4.89% rally. Okay. If you didn't get that video, it was because this trade was actually a members only trade. Okay. Because this was about $22 million when we analyzed it. And so this was for our members only. We posted this yesterday before earnings, November 28, as you can see here. And we told all of our members that this was a bullish trade here, as you can see from our analysis here. Okay, so that is the value of our memberships, and where we put a lot more capital to work in the trades that we share with our members only. If you are interested in that, you can click the link above for our website. You can join there, or on YouTube by clicking the join button. The difference between joining on YouTube and the website is that on the website we get your email, so we can share additional trade ideas where we have no time to make videos for. Okay, on YouTube, because YouTube does not share email addresses, we don't have your email, so we can't share that additional trade ideas. So that is the difference between the two. So it's more encouraged to sign up on the website because of that additional email alerts, because we can't make videos for every single unusual options activity that we detect because of our limited time. Okay, so back to Snow and how we traded this based on that. All right, the options chain, we can see here for the December 1st over here, the 185s are over here, right? 195s are over here. Okay, because the open interest, though, you could see here, this is greater than the 1007 for each of these strike prices. So that, again, lowers the confidence level of this prediction. Okay, because they could be closing trades and not necessarily opening the trade. And so that would be the opposite of the direction. If they were originally bullish and now they're closing their position, well, that means they're not bullish anymore and they are bearish. So for the December 8th, we can see here, this was right here, we have our trade, and also you see the unusual options at the 185s. In this case, you can see that the volume is greater than the open interest, so we know these are opening trades. Okay, down over here, the 205s, right over here. All right, so the way we traded this to go bullish, because it's slightly leading bullish, but it is still risky, so we don't wager very much, is we took the 185s and we sold 2 contracts for each of our trades and bought the 180 strike calls and the 187.5 strike calls. When you analyze the trade, you can see our trade here. This is a broken wing butterfly trade. As you can see here, currently Snow is at 175 here. As the stock price goes up, this becomes a profitable trade. If it goes down, it is a loss here. We can see the Greeks here, positive 4.45. So this is going long, bullish. Okay. And as we mentioned, we don't put a lot into this type of earnings trade, but we still trade it. Only costs about $105 per trade. And so we can position size our risk depending on how much we want to put into this earnings trade. Okay, so that is how we trade this. And if you are interested, again, in our membership where we have better trades, then make sure to click up here for our website to learn more. All right, please smash that like button, and you can subscribe also and hit the bell icon to get notified of further unusual options activity on this channel. Thank you and good luck, everyone.